Hey guys, Mike here. So another jam-packed video for you, and what we're going to concentrate on today is first I'm going to show you the snapshot picture of a few metrics of the sentiment in the market, where we're at right now. Then of course we have FOMC tomorrow, so the Fed, right? And we're going to look at what the market is pricing in or projecting in, right? Of what they're going to do. Then something which you should not know about, but the Fed probably loves seeing this, and I don't like seeing it, of course, because I've worked jobs myself. But something that could absolutely push the Fed to make these cuts, right, that are being projected and stuff. And then we'll go into a couple charts, not too many, just because obviously we got mega earnings happening right now. I think Microsoft up, Google down, AMD is down right now. And so, we'll see where we're at tomorrow. Just so much economic data tomorrow, which we'll of course go over and look at. But looking at where consumers, investors, where everybody's looking right now in the market and how they're feeling. One, you do have consumer confidence, right? This consumer confidence index came out. It's going up. No shocker there. And you can, obviously see because why? Inflation's coming down. I know it don't feel like it. But as far as the numbers they tell us, it is coming down. So people are looking forward to that. They're looking at lower rates, right? Easier to get money, that kind of stuff. And so that's one thing. What else we got? You got your AAII, U.S. investor sentiment bullish readings versus the bearish readings. Well, you see where we're at. We're pretty far up there, right? And so on the higher end now versus on the lower end. So people are bullish for the market, even setting at all-time highs. What do you see in your fear and greed indexes? The two I track, obviously, both wore an extreme greed this morning when I did a morning news brief. But when you look at this one, you can see this one is still an extreme greed, sitting around 77 right now. It can get all the way up to 90, right? You can see it's been higher in the past, just over the last 4 years. And so it can go up there, but this is those areas where you got to watch out, right? The ones you probably know the best, CNN, Fear and Greed Index. This was extreme fear this morning. Dipped under, now it's at 74. So 75 and above is extreme greed. So that's kind of where the market sentiment's at. Now, what are these rate cuts we're expecting tomorrow? Zero. I think we all know that. There's no way. I'd be stunned. I think everybody would fall out of their chairs if they did a rate cut tomorrow. March, all of a sudden this went from 75%, I showed you probably a month ago. Now it's down to 39%, 60%, so they're going to keep it where it is. This can obviously change because we're just going into February in a couple of days, so we got time for this. Where is everything shifting? Shifting into May. I think everybody's got a big bet on this. 54 plus, 30-ish, 84, about 85% right here believe, right? Only 15% believe they're going to keep it there. And when you look at a bigger view of this, going over the next few meetings, things like that, you can see now it's starting in May, and then from there on in, they believe there's going to be rate cuts coming down about anywhere from 100 to 150 basis points, depending on how you look at this, right? And so that's what they're quote-unquote pricing in. And of course, if it happens, it'll be good for what? Small caps, high beta stuff. If it doesn't, this is IWM, not a good thing, okay? Because these are the most rate-sensitive companies, stocks out there, right? And so we shouldn't see a big move in tomorrow because nobody expects a rate cut. If you don't get one, and let's say March goes down to like 20%, then of course, it's not going to be a shock. But if you don't see one in May, boy, that could be big time. So we're really listening to what they're going to say tomorrow, right? And you see IWM here setting at a resistance level right now. Kind of just consolidating, no big deal. Got all those moving averages right below it in that area. So between like 180, 186-ish, that's where all those anchor VWAPs are setting at, which I don't have in there right now. But again, if it breaks through that area, oh boy, you're going to see a lot more downside for sure. And it'll really have to hinge on what the Fed has to say. For example, and guys, before we continue, if you hit that thumbs up, I'd certainly appreciate it. It helps people find the video. And if you like the content, think about subscribing. If they come out and say, well, we don't think we're going to be, cut until at least summertime, right? June, July, whatever it is, when the whole market's pricing in May now, well, yeah, that could be a big problem. You can see a big rug pull shift down. That's when you get your pullback, right? Because February is already known to be iffy to begin with. But if they come out and say, well, yeah, we can see May going on for sure, boom, they can launch us up to 5,000 on the S&P, right? So that's really what they're looking at, is more like what they're going to say and what the projections are. Okay, I don't know if the dot plot's coming out tomorrow or not. Maybe it is. If it does, we'll get to know where the members stand and stuff. Now, the thing that could push the Fed to absolutely do this, because remember, we're in a presidential election year. I know the Fed's supposed to be independent and all that good stuff, but we've seen in the past that is not the case. Okay, that is not the case. We all know this. All right. But when you look at this right here, I'm going to take you through this. And I bet you, a lot of you don't know this many jobs have been lost. But just today, UPS announcing 12,000 job cuts. That is massive, people. That is so massive. When I saw that number, I had to look. That is 14% of their total workforce. They're a big company. Union jobs, right? Good paying jobs. That sucks. I feel bad for anybody who's out there, by the way. Let us know in the comments that you, and I'm sorry for you because I've been there. Now, Jack Dorsey, what did he say today? 10% of Square staff is going to be laid off as well coming 2024. This is what's crazy though. Look at this. Since January 1st, 2023, 5,487 plus companies here, so more than that, have announced mass layoffs. Since just the beginning of this year, we have over 229 companies announcing these layoffs. And if you scroll down here, you can see right here, right? January 30th, American Airlines to lay off 656 workers. 29th yesterday, iRobot Vacuum, which by the way was one of the best purchases my wife and I ever made for ourselves for Christmas. I think it's great. I highly recommend it. Cleans the floors very well. Lay off 350 employees. Levi Strauss is going to lay off 10 to 15% of the corporate workers. Here's Tencent Riot Games laying off 11%. Look at this right here. Gets better. Leading companies that announced layoffs 2023. Look at the numbers. Whoever BT is, that's what, 55,000, UBS 35,000, Yellow 30,000, Accenture 19,000, Amazon 18,000, Nokia 14,000. Let me get my breath. Microsoft 10,000, Meta 10,000, and Maersk 10,000. But look when we scroll down this thing, you can see the number, right? You can see the company, and here's the layoffs. Macy's, that's another that came out the other day, 2,000 right there in January. So, I mean, it's hitting everywhere. It's not just tech, okay? And so 13% of his corporate staff is going to be gone. Wayfair, 1,650 people. Bosch, 1,200 people. Citigroup, 20,000 right there, which that's over the next 2 years. Google, hold on to this one. It says 1,000, right? We'll get down to something even bigger than this. They made an announcement last year, and we'll see if they follow through. Unity Software, you see it. GDI, whoever that is. Twitch, 500. Tela, whatever, 3521. Enphase, which you know about. Johnsonville, 400. And it keeps on going down and down, as you can see right here. But look at Google. This is something they announced they made last year. Like trying to lay off like 30,000 employees. And why are they trying to look at doing this? Because of their AI advancements. That's why. And so no surprise here. Like I've said before, I just don't think people really understand what's going to be happening with AI and the amount of jobs that's going to be lost. I mean, people are literally creating the instrument that's going to replace them, which is kind of crazy when you think about it, right? And so when you look at that, you're like, holy moly, right? That's not even, that's publicly traded companies, okay? I mean, I don't know how many non-publicly traded companies are doing layoffs like that. And so that's a lot, right? And if that continues, remember what do publicly traded companies do? Obviously, the number one on totem pole is the shareholder, right? And so that's why they're going to keep saying, Jimmy, you're doing Billy's job and yours, or you're fired too. And also, robot AI thing, you're doing these 10 people's jobs because we don't have to pay you. Good luck. Oh, you created that? Yeah, I appreciate you doing a great job. You can get your stuff and go now. Like that's pretty much what you're seeing right now. And so, again, when you don't have a lot of growth going on, you got to figure out how to hit the bottom line some other way. That's what a lot of companies are going to do. You tighten the purse strings. What's your biggest cost? Employees, right? AI, robots don't get sick. They don't get health care. Don't have kids get sick. Nothing like that. Don't have holidays to take off. No 401k packages for them. So, but that's a lot of people. And if that continues to take place over the next few months, which you might see, that could force the Fed to say, okay, I guess maybe we need to start cutting rates and dialing it back here. So we'll see. Or it's what they want. I mean, that's actually what they really want. I've said that for a long time, but you know it too. That's what they really do want is see people losing their jobs, right? And still, the other thing is, what's the only way to fix the housing market? To me, it is a recession, by the way. I don't know any other way to fix the housing market like this. We have low inventory, high prices, and high rates. What does a recession do? It drops rates, it drops demand, which drops the prices, and it increases inventory, right? Because people aren't going to be buying it because they're in a recession. Most people are losing their jobs, that kind of stuff. Again, if you got another way to do that, let me know. We've just never been in that situation. Now, when it comes to just a couple of charts here, obviously Tesla, another gap up today. You saw it hit this level right here. What is this level? Why did it stop here instead of just continue to go on and on and on? And, when you pull up, it's not moving averages. I tried the 200 weekly. It's not that at all. What you got to do is just always scroll to the left. See what level is there. There's going to be something there that stopped it, right? When you come over here, it is simply what used to be a support line right there. Bam. That right there is what stopped it. Okay, that's what started moving it down today. And so, when we go back and look at this, plain and Jane, when it hit that, started selling back down, came down, filled the RTH gap. Then when it bounced right there, always one of the certain levels, always one of the big levels, the prior day's high, right? That just became support for the rest of the day from 1 p.m. on. And you can see the big thing about this one is look at the MACD down here at the bottom. That's the daily. So if you end up getting a bullish MACD cross, that means it's going straight up, but it's a lot better, right? Because it means momentum is turning. And again, you see a MACD cross right here where it came up, nice big move up, and then sold over, and then continue the move up, right? Because nothing goes straight up in the line. And, you look at this right here, kind of the same thing where the bullish MACD cross happens. You get a little sell down, consolidation, then move up. And you look at several others where this basically has happened. So we'll see if this is the case. Again, with so much in FOMC and the earnings and where we're at as far as market sentiment and stuff, we'll see where this is going to go. As you can see on the shorter term time for like a 4 hour right there, that's just starting to cross. And so, again, doesn't mean it's going straight up. It just means momentum is kind of trying to shift up, right? Now, so far we talked about yesterday, can it hold the gains? The answer is no. 8% move down on the day. And we couldn't figure out, and what we were trying to figure out yesterday was like, is it going to be this where it continues up? Or because it has trouble holding on these gains, it's going to be that right there. We'll have to see. Again, on this one, when you pull out, again, it's got a bullish MACD cross on the day. Well, that's not a bad thing. And you got the moving average right below, so maybe you come down to 50, 100, 200 right there. Be a nice bounce point if that is the case. But again, you pull on the weekly in this thing, what do you see? It wedging, just setting in this wedge. And so it has to break one way or the other eventually. That's really, I think, going to be your breakout point right there. And the top of that wedge is around like 970, I believe it is. And so pay attention to that. But again, these move together. Fintechs move together most of the time. That's why you see all of them red today. SoFi leading the way, of course. So not surprised on that one. Same with semis a lot of times. And when you look at earnings coming out tomorrow, not like the big ones today, right? Boeing, I mean, my lord, if this thing goes up in earnings, I'm going to be stunned because all the pros they've had. But again, it is Boeing. MasterCard usually does well. Qualcomm will be an interesting one. We'll see if AMD is going to affect that one since they didn't guide very high or anything. They missed the guidance. Now, when it comes to the economic data, you're going to have a lot, right? Some before the bell opens. ADP employment change right there. Then you're going to have the Treasury refunding announcement before the bell opens up. So pay attention to that right there. We had an announcement the other day, but to me, that's not the official one. This one should be the official one, more detailed, okay? We had a positive reaction off what they put out the other day. Chicago PMI is going to be another one we're going to look at. And so they're expecting an increase in the forecast on this. And then you'll get a lot of information on oil and things like that, which nobody truly is going to care about because in the afternoon, you're going to have what? The FOMC meeting, okay? And so they'll announce it at 2 what they're going to do. We know they're not going to raise rates, right? And then you'll have the press conference at 2:30, which will get your crazy spike as soon as he says hello, whether it goes up or down. I always love watching that 1 minute candle at 2:30 exactly. It always makes some big move. The initial move is usually not the real move. It's usually going to go in the opposite direction. But everybody's just looking for the forecast. That's all we're looking for to say, okay, when do you think you do rate cuts? We'll see if he's just totally blasé about it. Again, these people bend over backwards, not to surprise the market. They know what's being talked about and everything. And so we'll see what he's got to say. But that's really the big one. And then I think Thursday, Friday, again, loaded even more with data and earnings, obviously, for sure. And so, we'll see how it goes. Let me know what you think. What do you think they're going to do and stuff? And how you think the market's going to perform. It looks like Microsoft, as I'm looking at this, is going up in after hours still. So people enjoyed those earnings, and Google is still red, and AMD is still red. So we'll see how that opens and affects the markets tomorrow. Because remember, semiconductors have been carrying, right, this market, the Max 7 over the last couple of weeks. And so if all the semis go red, that's going to be a tough move for the market, especially with, I think the S&P at some point in time set a new all-time high again today. It seems like every day it does, and then pulls back. So we'll see how that affects it. So anyway, hope you guys got some out of it. We'll get more into the charts tomorrow. And please hit that like and subscribe button on your way out. And just for the heck of it, if any of you guys have been to Yellowstone, I'm trying to plan a trip for next year, so I'm getting members' input and all you guys, I know some of you have had to been there. 1, is it worth it? 2, what's the best time of the year to go? Because I don't want to be sitting in a bunch of crowds or traffic if I can avoid it and things like that. If you can just give me some info, I would greatly appreciate it. And if you happen to recommend a place to stay, that will be even better. So anyway, have a good one, guys. Thanks so much for your help.